Let's touch base then with the management of Prudent Corporate Advisory Services. We've got Sanjay Shah, who is now joining in. He's the Chairman Managing Director, to talk a little bit more about their quarterly performance. Thanks so much for taking time out. Just taking a look at your top line growth, that has been a bit of a miss this time around, a 6% degrowth in terms of commissions. What led to this, and what is the outlook for the second half?
If you look at probably the last quarter, which was Jan, Feb, March, if you just understand the Prudent as a company, we have a significant business on the distribution side of mutual fund products, and we also started distributing the insurance products in last couple of years. And insurance is gradually becoming a very large piece in our kitty. However, as you all are aware about, January, February, March being a very robust period on the life insurance side, so that was a strong revenue which has occurred in January, February, March, and that's the reason I think the April, May, June shows some amount of dip in the top line, about some 6%, mainly because the insurance has not done that great. Number two, historically also, if you look at insurance as a business, I think first quarter and last quarter there is always a difference, because last quarter is always significantly better. So these are the two major reasons which has probably brought some dip in the overall revenue from if you look at Q1Q. However, my main business, which is mutual fund distribution business, has been doing very well. And if you look at overall on a YOY basis, I think my asset under management, which has gone up by almost 35%, and we ended the June quarter at 63,000 crore. I think my SIP book has moved by almost 100 crore in last 1 year. So we closed the year June with a 542 crore of SIP book. So overall, I think on the non-insurance side, we have been doing very, very good. If I talk about the overall outlook on the business front going forward, because insurance is always first quarter is reasonably dull, so we expect that business will definitely pick up in next quarters to come. And mutual fund, I think the overall we have a very strong tailwind, because if you look at April, May, June, there has been a significant mark to market gain which has accrued to the AUM. So if you look at first quarter's average AUM on which we earn commission was about 59,000 crore, while I ended the quarter at 63,000 crore. So already I'm starting my second quarter with a 7% uptick. So overall, we feel that on the mutual fund side, story is very, very strong. Insurance, historically, you have first quarter which is low. Next 2-3 quarters will be definitely much, much better.
Sure. Also, what I wanted to understand, Sanjay, was higher commission fee expense and other expenses which have impacted your bottom line as well. Could you shed light on what was the nature of these expenses?
So actually, because insurance is a high margin business for us, and overall, as the insurance revenue has dipped, and that's the reason you might see some amount of change in the ratio. Overall, the commission fee expense on the mutual fund side has remained steady, but high margin business of insurance has dipped. So overall, on a percentage basis, some amount of operating margin has dipped by about 1%, from 25% to 23.7%. That's the main reason, because your high margin business has came down in the current quarter.
Sure. And just also wanted to understand about retail participation, because that's been pretty strong amidst the market rally. Will we see participation come down at all in second quarter? Because one is anticipating that at these peak levels there could be some amount of profit taking eventually. How do you think demand trends are going to shape up from here?
So overall, if you look at April, May, June, I think the net sales has been very, very low. So there are two important parts. One would be SIP book, which is very, very steady for us as well as for the industry. And the very, very heartening news is that SIP book is gradually growing. And industry moved to 14,700 crore. We also moved by almost 100 crore in last 1 year to 542 crore. So that piece is very, very strong. Lump sum money which people invest based on the funds available, I think that money has started coming down in April, May, June. And simultaneously, some amount of profit booking is also visible in first quarter. However, my belief is that once market gets stabilized in this range, again, probably people will start coming back, because if you look at from the point of retail investors, the options are very, very limited, very, very limited for them to invest. So I'm not overly worried about retail redeeming significantly. I think this might be a transitory phase. And most important thing is the SIP. So the traction on SIP side is very, very strong.
Your outlook on the growth plans?
So I think we have been has an internal target of crossing 1 lakh crore of AUM in next 3 years, and we wanted to reach our SIP book to 1,000 crore in 3 years time. So I think these are the two important milestones which we have, and I believe we are on as far as that target is concerned, we are on track.
What is the current market share, Mr. Shah?
The current market share in the equity AUM, we are close to about 2.4%. And on the SIP book, we are almost about 3.7% as far as my SIP book is concerned. But because we represent the regular plan of the industry, so if you look at there are, say, I'll just give an example about April, May, June, about 14,000 crore of average SIP book. I think the regular plan was 77% and 23% was from the direct plan. So within the regular plan, our market share is almost touching 5%. So we bring almost, if I tell you about the my total number of SIPs currently which is live is almost about 20.45 lakhs. So we bring 542 crore from 20 lakh investors on a month-on-month basis, and our market share on the regular plan is touching 5% now.
Okay, and can you tell us a little bit more about your growth outlook for the non-MF business, especially on the insurance front?
Insurance, I think the last quarter was very, very strong, mainly because of the income tax related change which were on the horizon to be implemented from current year. However, we believe that insurance has a strong requirement for the penetration. So the story on the insurance retail penetration is also very, very strong. And I believe we'll be able to do the same business which we have done in last year, because at the end of the day, last quarter was very, very robust. And if we do the same business in the current year, then probably we'll be able to capture the growth story. But overall, we are very, very conducive on the insurance side. On the other distribution product like PMS, AIF, we also sell a couple of P2P products. We also sell small cash on our platform. We also have small piece of stock broking. So these are the businesses we believe that even though they are only 5-6% of our kitty, which is non-mutual fund, non-insurance, that business also has a significant scope for us to grow into our system. Main reason I can tell you, because we believe that the mutual fund distributors now has to move themselves from a pure mutual fund distributors to a multiple financial product distributors, and that traction I've been seeing on the ground level from our mutual fund distribution partners.
Right. Sanjay, great to have you today on ET Now. Thank you for highlighting how the quarterly performance was and what's likely going forward as well. Let's move on and let's